Hi traders, welcome to this week ahead analysis video with me, John, Senior Market Analyst here at Blueberry Markets. We're going to be taking a look at the week ahead analysis, have a look at those key important data points coming up, and it's going to be a data filled calendar for this week, which is great because last week we didn't see huge amounts of data, albeit important data, but we didn't really see the markets move that aggressively. Obviously, typically coming into month end in August, we see a lot of low volatility, so I wasn't expecting too much in terms of moves. But some headlines coming out over the weekend. First, we had China manufacturing PMI coming in lower than expectations and still showing some signs of contraction there. So very interesting data there. Obviously, this could roll over and have an impact on the Australian dollar and the New Zealand dollar in the sort of early stages of this week. US core PCE on Friday remained the same at 0.2% as expected, so no shocks here, and the dollar obviously recovered towards the end of last week. But importantly, this week we've got the Bank of Canada rate announcement forecasted to see 25 basis points. That would be the third consecutive cut from the Bank of Canada. GDP actually last week showed a slight increase from quarter on quarter, so that was quite interesting to see from Canada's point of view. Starting to see them those rate cuts perhaps boosting the economy there slightly. Obviously, they were cutting interest rates to help the unemployment rate that was in Canada that was growing, and they're trying to fix that problem essentially. So another 25 basis points on the cards there. But the most important data coming up this week, and I think the market may kind of ignore a lot of other data, is the non-farm payrolls. Market's very fragile to labour market data. Obviously, Jackson Hole, we saw Federal Reserve Chairman Jerome Powell talking about the pace of cuts is going to be dependent upon the upcoming data. Obviously, market very fragile to labour market moves. So I think if we see any shocks here in the non-farm employment change, then it could bring about some aggressiveness from the central bank. But just to bring your attention to this is a non-farm payroll seasonality calendar, and we can see here that actually the payrolls are following a very familiar 20-year average. So you can see here that the average is this blue line through here over a 20-year period. They have 2023, which is the green line, and the red line here is 2024. And you can see we're following this average pretty closely right now. So that tells me that maybe we would start to see a little bit of an incline in the job growth situation in the US, which could dampen the pressure for the Federal Reserve to cut rates very aggressively in the near future. Let's go take a look at the currency strength meter then. Not huge changes here to last week. Kiwi still a stronger currency. Dollar remains weak. Yen remains very strong in those positive areas, and dollar in the negative area there. So nothing really changed on currency strength meter last week. Going on to the US dollar index then. So this is the weekly chart. We can see that we rebounded in at those 101s, that support zone we spoke about last week. If we continue to see the recovery here, let's say NFP comes in better than expected, the pace of cuts from the Fed won't need to be as aggressive, then we could see a recovery up towards the 102.50s. If we see a flip side of that and we do see aggressiveness coming from the Federal Reserve, then we could see some moves lower here down towards the 99s. But with that close there, we had to expect some kind of pullback at some point anyway because of how aggressive the market had been selling US dollars. So I wasn't necessarily surprised by this comeback of the dollar last week. Going on to cable then. So we talked about a short-term topping cable from a seasonal point of view last week. We've started to see that start to play out on the 4-hour chart here. We had this really nice head and shoulders pattern. Price continued to drive lower in towards that 131 handle. I think if we do start to see the seasonal continue to play out, then the 1.3 could be met this week if we were to see another kind of push lower in strength of the US dollar and some bearishness via the pound. Going on to the dollar Swiss then. Dollar Swiss, an interesting market for me. We've got some CPI data coming out of Switzerland this week, but seasonally as well, Swiss franc can be a little bit weaker. Currency strength meter also showing some signs of weakness in the Swiss franc as well, and we are at this major level of support towards that 0.84 handle. So maybe we could get a little bit of a move higher if we were to break last week's high. I think we could see a little bit of a move towards the 0.86 or even 86.75s. And then finally then gold. So gold, a very interesting market this week. Like the idea of gold coming back down towards the 2480s. If we breach beyond that, then we could see price continue a little bit lower. Now, long term, I still feel like gold is very bullish. We are consolidating at resistance. That can lead to bullish breakouts again. But the commitment of trade reports are showing some heavy positioning on the sell side here, and that can cause a short-term top within the market. So although I think gold could be one to watch again this for the remainder of the year in terms of breakouts higher, then we could see some short-term pullbacks in the meantime though. So that's all I'm going to leave you with this week. I hope you have a great trading week. I will speak to you in the next video. Cheers.